Hey there, my name is John Stevenson. Welcome to the show. Today we're going to be talking about why financial advisors either love or hate annuities. And I love this subject because there's lots of good reasons here. Okay, so if you're an advisor watching this, then you'll probably understand everything that I'm talking about, and you may agree with me, you may not agree with me. You may not like that I'm sharing these things, that I'm being transparent about this, but really this channel is for consumers. This channel is for people who are looking to retire and they've got advisors who are advising them against buying annuities or advising them to buy an annuity and maybe a particular annuity, and they're wondering why. Okay, well, if you watch my channel, you'll notice that I love to share everything. I love to share all the annuities, all the companies, and I want you to be able to make the best decision for yourself. That's why I also provide my annuity calculators, which have a direct feed to the carriers so that you can research and see which annuities would best fit you. You know, you can research yourself and not have to rely on your advisor. And then, of course, if you're looking to purchase one and you're looking to work with someone who is transparent, someone who specializes in just annuities, that is myself. And you can book a call with me right below this video. It goes directly to my calendar. We'll get on a Zoom meeting. Otherwise, you can go to my website and you can book a meeting with me there. But I always encourage people to check out my calculators first and kind of do your research and then reach out. Okay, that way you kind of feel like you have that knowledge instead of having to rely on your advisor, hoping that they're going to share with you everything, and most of the time they don't. Okay, so let's first, and I'll share my screen here in just a second. I want to go through some of these numbers with you, but first, let me just be straight with you on this. And I know you probably already know the answer to these questions. But if you have an advisor that is saying, no, do not buy an annuity, they are so horrible, like Dave Ramsey says that, or Susie Orman says that, okay? You got other advisors out there on the internet that are saying annuities are horrible, or talk to us first before you buy one, right? I mean, there is so many different motivations when it comes to either selling you an annuity or pushing you not to buy one. Okay. So if I'm an advisor and I am managing money and I want to keep that money under my AUM, right? My assets under management, then I'll tell you, don't purchase an annuity. Because if you take your $1 million out, let's say, and purchase an annuity, now all of a sudden my 1%, my $10,000 fee each year, will not be given to me. I won't be able to make that money. Okay. And if I do this, if I have a bunch of my clients doing this, now all of a sudden, if I got 10 clients that do this, I'm going to lose $100,000 a year in fees. I'm going to absolutely tell you not to purchase an annuity. Or I might be thinking, well, I want you to get you as much growth as possible, as much market-based growth as possible. And there's all these great mutual funds, there's all these great indexes and these stocks that I want you to be in for maximum growth. And if that is your focus and that's all you want is growth, then I'm going to tell you, you should only be in the stock market. That's all you should be in. Okay. Don't go after these annuities because they're not going to pay you as much. That is definitely a motivating factor. And that's sound advice. If you're looking for tons of growth and you don't mind having market risk, then yeah, don't buy an annuity. Listen to your advisor and stay in the stock market. Okay. So it just depends on what you need that money to do for you. Do you need it to give you contractual guarantees like an annuity can give you? Or do you just want as much growth as possible and you just want to stay in growth mindset? Then yeah, that's pretty easy. Now, there are also advisors that say, you should definitely buy an annuity. Okay. And you might think, well, I don't really need one. Okay. I don't need the income. I've got plenty of money. And why are you trying to sell me this? Okay. I had someone call me yesterday and they're like, my advisor's trying to sell this to me. I don't know why. He already sold me this variable annuity 7 years ago and it's out of the surrender charge period. And he's like trying to sell me another one. And I'm like, well, I'm doing fine. Why do I need to buy another one? And I told the guy, I said, well, I don't know for sure, but if he sells you another one, he's going to get another commission, right? So not that I don't want to pass judgment, but unfortunately there are a lot of people that just do it for the commissions. Okay. And advisors especially might push a certain product and they might just push that product over and over and over. Okay. I know a company that is in Las Vegas and they push one particular product with one particular company and that's all they push. Okay. And it is a good company and they've got decent products, but they're not the best for income and not the best for growth. Okay. They do have some decent growth products, but they're not the very best. There are some better ones. Okay. But they justify it because the company's been around for a long time. They're A+ rated and they're good. And they are correct. They are a good company. But what their clients don't know is that their commission rate is very, very high because they do a lot of volume. And when you do a lot of volume, you get kickbacks, you get higher overrides, you get trips, bonuses, all these different things. And so, yes, they're offering a good product, but it's not the very best one, but they're getting incentivized very, very well for it. And because of that, they push that product. Okay. That's a good company. Okay. There's another company out there that advisors like to push as well. And that company is Allianz. Allianz is they're a very good company. They're huge. Okay. They're $3 trillion in assets. They're A+ rated. They've got some very good increasing income options that I love. Okay. But for the most part, when you're looking for high level income, they're not the highest for that. Okay. There's nothing wrong with taking that. And I have clients that want that because they're just so big and they feel like they're too big to fail. And that's great. But I'm telling you, the commission rates are huge. Okay. And unfortunately, I think that's why a lot of advisors will push that company, only that company, because they can get these huge commissions. I'm talking like 3% higher than normal. Okay. They might get a 7% commission and they might be able to get an override of 3% on top of that. Okay. Now that's different for every advisor, but a lot of times when you get your broker dealer pushing you to sell one thing, they're going to make more and you're going to make more. And I get it. Everyone's got to make money. But here's the thing. If you're a consumer and you're like, I've got $500,000, this is all I got, and I want to make sure I'm getting the right thing. This advisor I've been with for like 20 years, he's telling me I should buy Allianz. I'm going to listen to them because they never steered me wrong. That's fine. But you should still keep your eyes open and say, are there other options out there? Okay. If you're looking for highest income, maybe you should be looking. Okay. If you're looking for the highest rate of growth, like fixed growth, like a MIGA, you might be better off looking elsewhere. If you're looking for just straight growth in the S&P 500 and you want as much as possible and you don't want to be with a company that is known to push their participation rates down on that index later, maybe you should look elsewhere. Okay. There are better options for different or from an A- or A or A+, we'll look at all of it. Okay. That's why I always tell people, go to my website, check out the calculators for yourself, look for yourself. Okay. Then call me or don't. Okay. But if you want me to help you buy an annuity, I'd love to help. And you can book a call on my website, johnstevenson.com, or you can book a call right down below this video. And we'll get on a Zoom meeting and I'll show you everything and answer your questions. So let me share my screen. I promised I was going to do that, but I want you to see what this can look like. Okay. So let's say you live in Iowa, you're 62, your spouse is 62, and you've got $1 million, okay? You decided you're going to buy an annuity against what your advisor said, and they're really upset because now you're taking this money out of their assets under management, and they're going to make less reoccurring revenue. But you decide that's the best thing for you. So then you decide, well, I want to buy an annuity, and they're like, all right, fine. Here's an annuity from Allianz, right? Or here's an annuity from F&G or whatever, okay? And you're like, all right, well, it looks pretty good. But is it the best? And they're like, oh yeah, it's the best. It's the best. All right. And then you start looking around. You go to my website and you start seeing all these options. Like, wait a second here. Okay. And then now you'll notice that there's obviously biased. Okay. Everyone has an agenda. Everyone wants to make money, and I get it. But for me, it's just like, all right, I might make a good commission from you from one product and a bad commission on another product. But if it's the best thing for you, I don't care. It all evens out. I work with hundreds and hundreds of people. Okay. It evens out. To me, the best way to run a business is just to make sure everyone is really happy. Okay. Everyone gets the very best for their needs, because if you do that, people are going to contact you again and they're going to refer you, and you're not going to have a bad reputation 10 years later. So All right, let's take a look at this. $1 million. Now, again, your amount might be way less. It might be 100,000, might be 200 or 300,000. That's fine. I work with a ton of people that are 200, 300, 400,000. And I would say that is pretty normal because most Americans don't have like $1 million just to drop into one of these. But I do work with a lot of people that do. So it just depends on you and what you're looking to do and how much you're wanting to invest for yourself. All right, so let's look at the income. All right, so it's obviously substantial because it's $1 million. So if it was 100,000, it would be a tenth of this, right? So it'd be $9,800. So that's a very easy way to figure this out. But with Nationwide, you can see they're the highest payout right now. Now it might be different when you do your research, but that's what it is right now. Okay, and then you got Corebridge, and you got ClearSpring. And by the way, when you go to my income rider calculator, you'll see other options that are even higher than this. Okay, why? Well, I'll just show you that. Let me just show you. There you go. American General Life, Meritage, NASA is one of them. They give you higher income to a certain age. Okay, this one's $115,000 till age 74, and then they reduce it by quite a bit. Okay, they reduced it by $40,000. Okay, so it's a good payout, accelerated payout if you want to bridge an income gap, an income need in the beginning years, and then maybe you're taking income from Social Security or pension later, and that takes care of you. So people will do this to retire earlier. But you can see, fair warning, that income does it is high in the beginning, but then it goes down later. So it's not a bad product. It just depends on if you want that. Most people don't. Most people, they're just like, I just want the highest income that doesn't reduce. So anyways, I just want to make sure that you saw that because you're going to go to my site and you're going to go to the income rider and you're going to be wondering, wow, why are these other ones paying me that much more? That's why. Okay. So, all right. So we'll look at ones that don't decrease at all. Okay. So we look at this and say, okay, well, Nationwide is the highest. It does not decrease. Okay. And that's what we want. And let's just see here. All right, $1 million, give me $98,000, $175, and that's after 4 years of deferral. Pretty good. And your advisor is like, yeah, your advisor, maybe he didn't share this with you. Maybe. Just showing you an example. Let's see here. Oh, look, there's Allianz. Big company, great company. And they are great. And so is MassMutual, okay? So is Athene. Okay, but look at the income. It's $84,000 a year. And if you're fine with that, then fine. I'm happy selling it to you because I'll make more money. But wouldn't you like to know about all these other options? Okay, I would. It'd be nice to know that Nationwide, who's also an A+ rated company, who's also 100 years old, offers more income. Okay, so that's totally up to you. But I just want you, when you're researching this, you just need to know how these work. Okay, so with Nationwide, you can see $1 million going in there. And then they show you what it looks like with growth. Either way, the account balance runs out, but you can see the income is guaranteed. That never, ever changes, okay? And what they're doing is they're taking a 1.6 million benefit base, multiplying it by 5.95, giving you 98,000. Okay, if you take an income earlier, it's 92,000 in 3 years, or 73,000 in 2 years, and so on. So it's very flexible, so you can activate income whenever you want. But your advisor is like, I don't want to show this. I'm not going to make as much commission over here than I can with these other carriers, right? That's the thing. And so I always just tell people, what is the motivating factor? Okay. You got to do what's best for you. Okay. And there are reasons why advisors hate it and reasons why they love it. Okay. And everything in between. And for me, I love both. Personally, I love the stock market. I love mutual funds. Absolutely. And I am invested. I've got ETFs and I've got stock. Okay. And I want those for growth. And when the market takes a dump, I'm not going to be stressed out about it because my annuity contracts are what's going to give me the contractual lifetime income that I want. They both serve a purpose. I don't want my annuities for growth. Who cares? I want that for income. Okay, you use your money for income eventually, right? So you can just be on the growth forever. You're going to be acting like you're 30 forever and just always growing, or do you want to enjoy some of it? You've spent your life growing it. Use it. Okay. You don't have to use all of it, but use some of it for your guarantees. So that's what I'm just trying to show in this video is that you can do that, and you can do it by doing what's best for you and not what's best for your advisor and or what they want. Okay. As a certified financial fiduciary, it is my obligation to show you everything, be transparent. And if my commissions are low, I still got to show it to you. Okay. It's just that it's really that important. So anyways, hope this video has helped. Hopefully it gave you some clarity as you search around. And again, if you need help, please book a call. There is a link below this video. And of course, there is a link at my website, johnstevenson.com. Yeah, got questions, comment below. If you like the video, like, subscribe, share, you know the drill. I appreciate you for watching, and we'll see you next time.